You've been asking me about the fourth bank, the one that changed how I invest. This is it. It's not a bank. 30 years putting money into things most people never think about: toll roads, airports, power grids, assets that collect a check whether anyone notices them or not. 18 months ago, I walked away from a bank deal I'd spent a year building and put that money here instead. 3 things you don't know yet: why I said no to the bank, why the wheat on this land might lose money in a good year, and where the real return is actually coming from. Stay with me. I'm Frank. Some of you know me from the times John's brought me into a video, the airport story, the bank episode. John's traveling for business this week, so it's just me today. I've spent my career investing other people's money into infrastructure, the kind of asset a pension fund holds 30 years and never sells. This is the first time I've put real money of my own somewhere I can't hide behind a fund's diversification. If that interests you, subscribe. New video every 2 days. Now, let's talk about wheat ground. Not all farmland works the same way. A cash grain operation sells bushels. Custom farmed ground earns a fee, not a crop check. Land in a federal conservation program earns a government rent check and grows nothing you'll harvest. Land under a solar lease can out-earn most crops without a planter ever touching it again. 4 businesses, same-looking dirt. I bought ground built for the first and ended up using pieces of all 4, because the acres that make a bad cash grain field often make a very good conservation or solar parcel instead. Frontier Farm Credit's benchmark data puts eastern Kansas cropland at $5,684 an acre to close out 2025, up 7.4% on the year. Nationally, cropland averages $5,830 per USDA. I bought 1,600 acres, $9.1 million, before a single bushel, before a single input cost. I put 30% down, just over $2.7 million, and financed the rest through the Farm Credit System, a 20-year note at right around 6%. That works out to about $555,000 a year in mortgage payments, principal, interest, due every single year, whether the wheat comes in or not. Hold on to that number. It's the bar everything else in this video has to clear. 1,600 acres was the number that made the loan serviceable without betting the whole operation on one good year back-to-back. Go much bigger on the same terms, and the mortgage payment alone needs a run of good years just to keep pace. And I've sat across the table from enough workouts on the banking side to know how that story usually ends. Cheaper ground looks smart. It isn't automatically. Head west and land gets cheaper fast. In the dry western third of this state, you can find dryland wheat ground for $1,500, maybe $2,000 an acre, a third of what I paid. But cut the rainfall roughly in half, and you cut the yield close to in half with it. Make that yield back with irrigation, and a single center pivot system can run well into 6 figures before you've paid a cent for the water rights underneath it. Every dollar saved on the acre, you can spend right back on the well permit. I bought where the full math worked, not the cheapest number on the map. No wheat in this shot because I'm on the North Quarter on a Tuesday, and the man running the agronomy is at the bin site, doing what I can't. Full-time farm manager, hired the month I closed. Salary, a house on the property, a share of the crop margin. I've never claimed to know wheat. I know a balance sheet. Pretending otherwise costs more than his salary ever will. Here's what's not in the brochure. USDA's 2025 cost projections put the full cost of growing wheat at about $396 an acre. Break that number down, and about $155 of it is operating cost: seed, fertilizer, chemicals, fuel, and fertilizer alone eats close to 40% of that operating line by itself. The rest, better than $240 an acre, is overhead. Land, equipment, insurance, management, the cost of simply running the operation before a single input goes in the ground. National yield came in near 52.5 bushels, and the season average price ran roughly 5 to 5.40 a bushel through most of the year. Run that math on my 1,600 acres, and a genuinely good year still comes in around $158,000 short, full cost accounting. Even after crop insurance and the ad hoc federal payments Washington's sent out the last 2 years, wheat growers nationally are still averaging around $70 an acre in the red. The aid closes part of the gap. It doesn't close all of it. Nationally, grain producers have absorbed over $50 billion in accumulated losses across the last 3 crop years. So why does this operation work at all? Because the wheat was never the only income line. 90 acres of erosion-prone ground sits in the Federal Conservation Reserve Program at close to $60 an acre. Call it $5,400 a year, guaranteed. No weather risk, no price risk. 40 acres in the corner nobody farms well is leased to a solar developer. Recent survey data puts payments like that at $1,000 an acre or more a year. On 40 acres, that's $40,000 from ground that was barely earning anything before. A soil carbon contract on part of the acreage adds a few $1,000s more for practices we were already doing. Added up, and those 3 lines alone bring in somewhere around $50,000 a year. Money that shows up whether the wheat crop is good, bad, or somewhere in between. And when harvest prices are weak, the bins on this property hold enough grain to wait for a better basis instead of selling into the worst week of the year. Kansas alone sits on over 1 billion bushels of off-farm storage capacity for exactly that reason. Growers who store instead of selling into the harvest rush typically capture a meaningfully better basis by late winter, hold even a third of my crop that long, and that's tens of thousands of dollars, some years that never show up in the base yield and price numbers I just walked you through. None of these lines makes headlines. $50,000 doesn't touch a $555,000 mortgage payment on its own. Together with the land itself, though, they're the difference between a working farm and a very expensive hobby, the honest range, with the actual math both times. Good year, 55 bushels an acre, $5.40 a bushel, revenue on 1,600 acres, about $475,000, full costs, about $634,000. The wheat itself runs roughly $158,000 short. The CRP, solar, and carbon income cover about $50,000 of that gap, so the crop side finishes around $110,000 behind before the mortgage payment even enters the picture. But the land appreciates over 7% that year, $673,000 added on paper. Netted out, and my worth on paper still climbs by more than $500,000 in a year, where the crop itself lost money. Bad year. Yield drops to 38 bushels. Price falls to $4.94. Revenue collapses to around $300,000 against the same $634,000 in costs. The wheat alone loses over $330,000. The side income still shows up, but it barely dents a loss that size. Land appreciation goes flat, 0. Between those 2 years, the swing is close to $1 million, and the $555,000 mortgage payment is due in both of them, good year or bad. One more number before we get to the fourth bank. Nudge yield or price 10% in the wrong direction in a bad year, and the crop side loss on this operation grows by tens of thousands more. Nudge it 10% the right direction in a good year, and the shortfall shrinks by a similar amount. That 10% either way isn't something I control from where I'm standing. So, the fourth bank. 18 months ago, I had a term sheet on my desk for a small regional bank. Good numbers, good management, everything my training told me to sign. I walked away from it for this. 1,600 acres, where the crop itself might lose money most years, where I'm carrying a mortgage payment north of $500,000 a year on land that might swing $1 million between a good year and a bad one. Not because the returns are better. Most years, from the wheat alone, they're not. I walked away because a bank is a spreadsheet I already understand. This is dirt, weather, half a dozen small income lines that only add up if you're patient, and a man I trust doing the parts I can't. At 70, that started to matter more to me than the spreadsheet does, even with a mortgage payment that doesn't care how I feel about it. If this changed how you think about safe versus interesting, that's the whole point of this one. Share it with the person in your life who thinks a farm makes money because of the crop. John's back soon, and he's going to react to everything you just heard, including the part where the wheat is basically along for the ride. Next time, we're doing the opposite of everything you just watched. No 18-year leases. No waiting 3 seasons to know if a decision worked. A business that's simpler to understand and pays a lot faster than this one ever will. I'm Frank. See you both then.